Good evening, everyone. It is Wednesday, June 22nd, 9:20 p.m. New York time, and I just want to make a quick video regarding what we all know is coming tomorrow. Finally, yay! Is Brexit. Big vote in the UK about whether they're going to leave the European Union or not. Now, I want to say right from the start, as you've probably been hearing all week everywhere, please, absolutely, positively, without a doubt, do not make any trading decisions based on anything I'm going to say in this video. I probably am not going to trade it myself. I may actually just take some trades on my demo account for fun. And it's, the thing is I'm worried about liquidity. If I did take any live positions, I would make them very small lot sizes. But the problem is, if it's very volatile and the liquidity is thin, if you're wrong, you may not be able to get out of the trade, and could really find yourself in trouble. So even if you put a small position on, so that's what's holding me back. Even though, because we really don't know what's going to happen. So my gut feeling is that in the end they're going to stay, but I think the vote will be close. And if they stay, then that's going to be positive for the euro and the pound. Although there's going to be a lot of volatility leading into it, so, and during it. So, anyways, please, be very careful over the next day and a half, because it's going to be ugly at times, at least the way they're talking. So, all right, so let's look at the euro pairs first. Now, you remember about 2 weeks ago I did a video on the euro Kiwi and the euro Aussie triangles, and I wanted to update you. Now remember what I said. Here's the euro Kiwi. We're on the weekly chart. Here was the triangle. We had already broken out. At that time we were over here somewhere. And I said, the target was this measurement of this widest part of the triangle measured from wave E, which was right here. From the end of wave E, which was right here. And I measured it down to where this horizontal line is. And if you look now where pricing is, where did pricing just touch? The horizontal line. Okay, now I do think that this will go down a little bit more, because if this is the last wave right here, it doesn't look like it's quite finished yet, so we may see this breach this line a little bit by let's see, this wave 1 is about 200 pips, so we may still see this go down about 200 pips. It may rally up a little bit more and then turn down maybe tomorrow during the voting, and the rumors and uncertainty. You may see it sell off a little bit more, but I still think ultimately this is going to bounce to the upside here, several hundred pips, and I'm still looking for that. So anyways, so that's the euro Kiwi. The other one that I had looked at back then was the euro Aussie, which was still completing its triangle, and it's still not done. Now the wave D is underway here. Now it's a little shallow right now, but again, if you look at a Fibonacci, normally the retracement on any given part of the wave is usually around the 61.8 Fibonacci retracement. So in other words, this wave D should retrace about this wave D down should retrace about 61.8% of this wave C up. That's a good measure. Now, so if I put a Fibonacci on this so far, so here's the wave C down here. I'm down on the 8-hour chart right now. Whoops. And I draw this up to where the wave D is currently. You can see we're sitting right at the 50%, and this arrow right here, this is the 61.8. So much like the euro Kiwi, we may see this continue lower tomorrow during Brexit. This is about 150 pips, certainly doable in a day, especially with the volatility. So we may see this continue down, throughout the day tomorrow, and then that once it hits around this area, that wave D is technically over at that point, and I would expect a rebound back up for wave E. So let's say we get to about this area and we go back up. That's still about 500 to 700 pips. Back to the back up for this wave E, and then at that point we would expect a major sell-off of a much larger move. So that's those two pairs. So again, I think both of them are nearing completion of their current patterns, but they're still in sync for what I had talked about. So we'll see. Euro Canadian on the daily chart here. I think I had drawn this out before, but this looks like a perfect wave, 5-wave pattern here. 1, 2, 3, 4, 5 completed. This is, to me, I'm going to read this as an A. This is an extended B. And then we may have started the C here. This may be 1, 2, and then we're going to go up and finish this. And this would take you back up to at least around the end of this previous wave 4 up here. And so off of this low to here is about 700 pips again. So you see we're all around 500 to 700 pips so far in these 3 pairs to the upside. So so we'll see. That's what I'm looking at there. Euro dollar, we're still inside this rising wedge here, which has not been broken yet. And so if it's favorable for the euro, when we say we get back to the top of this wedge, that's about 500 pips to the top of the wedge. And who knows, do we break higher and go beyond there, or does it get contained inside this wedge and then turn lower? The interesting thing is sometimes these corrections are actually in 5 waves, which that's not really an Elliott thing, but it's just something I've observed. And if you look at this, we have 1, 2, 3, 4. We go up for 5. This correction maybe could end at that point, and then we see a big sell-off, which of course is, you know, what we're looking for here in the Euro Aussie at some point. The Euro Kiwi, we're just much further matured here on the Euro Kiwi, and I do expect this one to go up. So I'm going to skip the Euro Yen because of risk aversion. This is completely different, although this has the shape of potentially, you know, moving back up. But if it's positive for the euro, we're going to have more risk appetite, and so the yen potentially would sell off if they remain, because investors will feel more confident and maybe not want to be bothered with the euro, with the yen, and we might see a movement up. So, but you know, at this point, I don't know. But if they stay, I would expect the euro yen would rally too. So again, we may drift lower tomorrow, and then if they stay, that we'll see this turn higher. But that's not my favorite one to look at. So that's it on the euro pairs. To me, they look short-term bearish, mid to longer term bullish. Okay, so over to the pound pairs, and again, I definitely, regardless of what I think, I am definitely not trading pound pairs through Brexit, because I think there's some uncertainty here. So here we are on the pound Kiwi on the 6-hour chart. We had a nice trend here, 1, 2, 3, 4, 5. We had a gap in wave 5. Oftentimes you see that in wave 3, but you certainly can see them in 5. You can see them in any wave, but certainly can see them in 5 as kind of an exhaustion gap to the downside. And now I'm looking at this as potentially a correction here on the 6-hour chart. And you know, on the daily we had this long-term downtrend. So is Brexit going to end that, and now we're going to move a lot higher, or is this just going to be a short-term bounce to the pound? But if you look at this, you know, you could either look at this as 1, 2, 3, 4, 5 for A, and then we'll go down for B short-term, and then we'll have a large swing up for wave C. Now eventually that C is still a corrective move, so eventually it would end and the price would go down. But that's about 770 pip wave A. So you get a short-term push down on for wave B. You know, this would be wave B of B right here. So we'll go down, up, down, and then we'll go up for C. And usually it's about the same length as wave A, which is why I measured that. So that would take us, you know, again, I figure if this corrects down a little bit more, say back to here, and you draw out 700 pips, look where that takes you. Right to the previous wave 4. This is the termination point of the previous wave 4, which is a classic target for a corrective move. So if this does turn out to be a rally, I would look to have a target right about somewhere around this high, and then I'd be looking to either exit, or just, if I was in a trade, which I'm not going to be, to have it go back down from there. So pound Aussie, kind of the same thing. It looks like we had a trend here, 1, 2, 3, 4, 5, and again, looks very similar, that we're still moving up here on a corrective move, and that we might see a push down and then eventually come back up and re-challenge a high up here, only to have it move back down. So this one's not quite as clear as the pound Kiwi, but I think you can definitely make out the trend on this move down, and this definitely looks corrective. We could see an A, B, C, and then a sell-off. So if so basically, from a fundamental standpoint, let's say that Brexit, they vote to stay. There's going to be some euphoria in the market. It's going to rally for a while, and then reality sets back in about the economy in Britain and the world in general, and then we see it sell off again. But again, it's just purely speculation. Pound Canadian, again, very similar picture. Looks like we had a trend complete down here, and now we might actually be potentially in the wave C now that this is an ABC. I think although this could have been the wave 4, although it looks really kind of out of proportion, but either way, I think this is going to go up again for a while, and then we'll see this rally back and then have this one sell off. It's not as clear to me, but we have, if you go down to the 3 hour, we have a perfect trend right here on the 3 hour. 1, 2, 3, 4, 5. So you could look at this as the wave A, and again, we might get a B down tomorrow during the vote, maybe come down, fill this gap for wave B, and then have it go up for C. So you could look at it that way, that this is an A, it will come down for B and then up for C. But either way, again, pull back and then rally, and that's kind of the theme across all the pound pairs. Okay, pound Swiss, same exact thing. It's very similar to pound Canadian. This could potentially be either this is an impulsive wave finishing. It looks like it's almost done. 1, 2, 3, 4, 5. Again, pull back and then back up again. So whether this is an ABC or this is just a 1 of a larger pattern that's developing, and then we'll go down for a 2 or B and then up for a 3 or C. So same idea, pull back and then rally. Okay, same as pound Canadian, same as pound Aussie, same as pound Kiwi. Pound yen I didn't even really look at. I'm going to skip that again because of risk aversion, and I'm really not a fan of the cable, so I'm not even going to bother with that one either. So anyways, that's all I really wanted to do, guys. Like I said, if you're going to be in any trades tomorrow, I think there's going to be some spillover across most of the currencies. I think even if it doesn't have a pound or a euro in the pair, I still think the dollar is going to have spillover effect. The yen is definitely going to, and the who knows, the Swiss maybe, because it's kind of opposite of the euro. So I mean, it doesn't really leave you a lot of options to try to trade anything away from the what's going on in the market. So I think maybe you could look at something like the Aussie Canadian. The Aussie Canadian which I have over here, looks like it's finishing an ABC. You have this downtrend, ABC, correction ends, market goes down. So this might be one that's kind of sheltered away from the action, because neither one of these currencies is involved with Brexit and is not really a major player in this. But still, I mean, I guess you could look at something like the Kiwi CAD, or I can't really think of much else right now. Aussie CAD, Kiwi CAD, So anyways, bottom line is, guys, be very, very, very careful if you do have to trade. I don't know. Like I said, the biggest thing in my mind is not so much worrying about getting stopped out or in a violent move, because I put stop losses in. But if the liquidity is too thin and there's nobody on the other side for them to liquidate your trade, you could be in trouble. And saw like what happened a couple of years ago with the Swiss, when the Swiss bank took the support off the Swiss, and it went through the roof, and brokers got wiped out, traders got wiped out. Some traders probably were made millionaires if they were on the right side, but you know, that's the type of volatility we're looking at, though. And so it's probably better off just to sit on the sideline and just wait and see what happens and wait for the dust to settle, and then kind of go back. And there's going to be opportunities based on the aftermath. So like I said, if you're going to trade, I would look to pairs like this that are going to be somewhat isolated from the chaos that's going to happen tomorrow and into early Friday for those of us here on the East Coast of the U.S. So anyway, so that's it, guys. Any questions, hit me up in our Skype room, or leave a comment here, like the video. I hope everybody has a great night. Be careful. You know, sit back and watch the fireworks, but protect your capital. You know, live to trade another day. As tempting as it might be to jump in, it's going to be a wild ride. So, all right, guys.